Yes, good afternoon, everyone, and welcome to this webinar on the OECD Economic Outlook with a special focus on Central and Eastern Europe. My name is Matthias Rumpf. I'm the Deputy Head at the OECD Berlin Center, and I'll be your host today. You might have heard this morning about the Brighton Global Outlook. Our outgoing Secretary General, Angel Gurria, and our Chief Economist, Laurence Boone, have presented. This progress or this good news is mainly driven by progress in vaccination rates, but also by policy measures. And we will look this afternoon specifically at the Central and Eastern Europe and see how the development is going there and how much of this positive impetus is taking root in the region. I'm very pleased that we are joined today by my colleagues, Isabell Koske, she is a Deputy Director in the OECD Economics Department, and by Mame Fatou Diagne, she is a Head of Division, also in the OECD Economics Department, and then by four distinguished panelists from the CE region. We have Maja Bednas, she is Director of the Institute of Macroeconomic Analysis and Development in Slovenia. Welcome, Maja. We have Michal Horváth. He's the Chief Economist at the National Bank of Slovakia. Welcome, Michal. We have Jakub Matějů. He is an advisor to the board at the Czech National Bank. And last but not least, we have Jakub Sawulski. He is a macroeconomics team leader at the Polish Economic Institute. Welcome, Jakub. We are also joined by a couple of colleagues from our economics department from the respective country desks. So we also have the country experts here at this meeting. We have Niklas Ruiz, we have Sradan Tatumir, we have Jan Christian Hoy, and we have Urban Silva. So we have a distinguished and large panel who will follow the discussions. And we would also like to discuss with you, the participants in this webinar. So if you have comments, questions, please use the chat function and we will make sure that, or try to make sure at least, given the limited time we have, to answer to all of your questions. But now, without further ado, I would like to give the floor to Isabell and Mame Fatou for the presentation of the OECD projections and for the CE region. Isabell, Mame Fatou, the floor is yours.
Yes, I'm sharing the presentation.
Perfect, thank you. So yeah, thank you very much, Matthias, for this introduction, and good afternoon to everybody, and welcome to this webinar. I will start with a few words on the general global outlook, and then Mame Fatou will guide you more through our projections for Central and Eastern Europe. So let me start with some very good news that Matthias already announced. The prospects for the global economy have improved considerably since our last economic outlook was published, which was in As a result, we have revised upwards our growth projections for this year to the highest growth rate since 1973. So that's a long time ago. This is due, as Matthias already said, due to progress in vaccination, in particular in advanced economies, but also thanks to massive fiscal and monetary support. Mame Fatou, could you please directly move on to the next slide?
Yes, just to make sure, are we seeing the slides correctly, or?
We do, Mame Fatou, it's all fine, yes.
Perfect, thank you. However, despite this very positive development, the health situation remains highly uncertain. As long as not enough people are vaccinated, new outbreaks may emerge at any time, and some activities and borders may remain closed as a result. The recovery is thus not an ordinary one, and that's also what we're indicating with the title of this economic outlook. Next slide, please. Mame Fatou, could you please? Yeah, perfect, thanks. No, now you switched one too much. Perfect. Here you can see the size of the growth upgrade. The orange line is our current projection, while the one from December last year is shown in purple. And as you can see, we now estimate the global income loss of the pandemic by the end of next year, so by the end of 2022, at $3 trillion. That's a lot. It's roughly the size of the French economy, but it's just half what we had been expecting just half a year ago. Next slide, please. Our upward revision to growth is broad-based, as you can see here. Numbers that are highlighted in green mean we upgrade growth by 0.3 percentage points or more. And as you can see, there are a lot of green numbers. Overall, we have revised our projection for world GDP growth up to nearly 5.75 percentage point. That's an increase of 1.5 percentage points relative to just 6 months earlier. Next slide, please. Let us now quickly zoom in on the German economy, which is an important trading partner and investor for countries in Central and Eastern Europe. A strict lockdown over the winter held back mobility, which was weighing on service sector activity. However, there was little pause in manufacturing, despite supply shortages, notably in shipping and semiconductor chips for the automotive industry. Foreign demand was the main driver of the improving situation in the manufacturing sector. So output in the first quarter was still 1.2% below that of a year earlier. Next slide, please. Inflation is probably the most discussed risk at the moment. So far, inflation reflects an imbalance between the demand for goods, which has surged with the opening of activities, and supply, which in many cases has remained constrained by restrictions and also disruptions, including in the transport sector. Could you still go back for a second? In the left-hand side in the chart on the left-hand side, you can see that reopening goes hand in hand with a rise in goods trade. And in the chart on the right-hand side, you can see that this in turn has been associated with a rise in sea freight costs. As economies continue to open in the coming months, we expect that there will be more surges in demand, while supply may take time to adjust. And this, of course, may then temporarily push up prices in the affected sectors. While up to now, this has mostly happened for goods, we expect that in the future, this may also happen for several services. And these disruptions ultimately will last until a certain cruising speed or equilibrium is reached for both demand and supply. That's all I wanted to say in my introduction. I will now pass on the word to my colleague Fatou, who will speak more about our outlook for Central and Eastern Europe. Thank you.
Thank you, Isabel. We still have some people joining in, and actually every time that there's I think because I'm host, every time there's a new entrant, I get a micro disruption. So that's okay. So now I'm going to zoom in on CEE countries and tell you more about developments in the region. The positive news of this economic outlook is applies to countries in Central and Eastern Europe as well. Growth prospects look brighter than they did 6 months ago, and we have revised upwards our projections. So we expect growth to rebound by between 3 and 4.5%, depending on the countries in 2020. And to accelerate and be around 5% in all 5 countries in 2022. So there are differences between the countries, as you will see, I mean, both in terms of the crisis impact and also in terms of the speed of the recovery. Poland in particular has been returning particularly fast to pre-pandemic GDP per capita levels. But within the next year or so, all the countries in the region are projected to have recovered GDP per capita. With this recovery, inflation has picked up. So similar to the trends in the rest of the world, we see that we have inflation picking up, and some of it is driven by temporary factors. Actually, temporary factors play a large role. High inflation rates have been reflecting higher food and fuel prices, the surge in shipping costs globally. One of factors that are specific to the countries, such as, for example, tax changes in Poland, or in the case of Hungary, the weakening of the currency. And many of these factors could ease in the short term, although we need to keep a close eye on developments on core inflation and inflation expectations. Labor markets have also been particularly resilient in CEE countries. In fact, in all countries, employment rates have started to recover, or we have seen some signs from vacancies that there is a recovery in the labor market. The unemployment rate is projected to fall and to return to pre-pandemic levels by the end of next year. There are, however, important risks to this positive outlook. The first one that we would like to highlight is that the strength of the recovery will very much rest in what happens in the rest of the world. And that is both an upside risk and a downside risk. This chart shows the share of value added that is embodied in foreign demand. So the data is not recent, but this is a structural issue. And the reason why I'm showing it again, for those who have been in this talk, the same talk that we had in 6 months ago, is that with the exception of Poland, which is closer this measure to the rest of to the average for OECD countries, for the other countries in Central and Eastern Europe, actually the share of value added that is embodied in foreign demand is actually among the highest in the OECD. So the economies are very open, and what happens next is very much going to depend on the pace of recovery in the rest of the world. And this is already reflected in the trade data. So the countries in Central and Eastern Europe for the trade in goods have actually been among the best performers in the OECD, with a strong rebound in goods export. The picture is quite different if we look at services, and that there it is more similar to what is happening in other countries, which is that the services sectors have mostly not recovered yet to pre-crisis levels. And that's the source of risk of how fast it will be able to get back to where it was. Finally, the last risk that I would like to highlight, in particular for Central and Eastern European countries, is that the recovery is not benefiting everyone equally. So even though employment has been increasing, there are encouraging signs in the labor market. The pandemic is reinforcing pre-existing trends that we have been talking about in the past, in particular polarization in the labor market. So basically what this is about is this trend whereby high-skilled occupations are growing. Employment in high-skilled occupations is growing and has continued to grow actually during the last year. But employment in medium-skilled occupations in particular has been declining. So there has been job destructions for these type of jobs. And then you have stagnation or no labor creation, no job creation for low-skilled occupations. So this is true in almost all countries in the world. So it's not just in CEE countries. However, the reason why we would like to highlight it here is that CEE countries have had actually quite limited active labor market policies, so support to job seekers to transition between jobs, which might be needed, and actually which is likely to be even more needed as a result of this crisis. And also because there has been little participation in all 5 countries actually in training for adults, that especially for those that have low skills to start with. So this is leading me to our policy recommendations for the transition and the recovery. Our key message regarding fiscal policy is that there is space to provide fiscal support to the recovery where it's needed. But at the same time, it's necessary to start preparing and to start preserving fiscal sustainability in the long term. So the transition from the crisis, from the emergency to the recovery is likely to require more fiscal support. CEE countries are actually in relatively good position because they have entered the crisis with some fiscal space. They had lower debts than many other countries. In addition, there is the EU funding. There are the recovery plans that provide opportunities for to provide more and to provide better support where it's needed. But on the other hand, there are long-term challenges that call for fiscal adjustments in the medium to long term. And these are still present, in particular aging, of course. So planning for addressing these long-term challenges can start now. So the adjustment doesn't have to happen now, but the planning can start now. And it has to involve changes both on the expenditure side, so that there is space for the needed investment, but also on the revenue side, so that the revenues is more geared towards supporting growth and preserving equity. So to conclude, we are now transitioning from emergency to sustainable recovery. I've already talked about the fiscal support, how to there's a need actually to improve the quality of investment by using the recovery plans and the EU funding to spend better. And that actually involves, in particular, all the phases of public investment management, not just the planning side, but also the budgeting, selection of projects, execution, which during the crisis has sometimes lagged, and also in targeting better the support to firms and people. Since we started with blanket support at the beginning of the crisis, now to move towards more targeted support to those who still need it. And for the longer term growth, a more sustainable recovery, the recommendations that are in the Outlook report are very similar for all countries. So it's first, of course, to vaccinate and improve resilience in the health sector. As I said, to plan for the clear and effective and sustainable fiscal frameworks in the medium term. And that will help with addressing challenges in health, in education and skills, digitalization, climate change. And finally, one issue that I would like to highlight, and that we will talk more about, I'm sure, in the discussion that follows, is the acceleration of structural reforms. In the presentation, we highlighted the issues related to productivity growth, to high global integration in CEE countries, and at the same time emerging cost pressures on firms, both related to trade costs and to wage developments. And so these will require accelerating structural reforms, in particular those that strengthen competition and trade, and those that upgrade the education and skills of workers so that countries can benefit from digitalization.
Well, thank you very much, Isabell and Fatou. I think a lot of topics to discuss. We have an uneven recovery. We have this issue of inflation. Everybody is thinking about. We have in the region a rather resilient labor market, but which is risk of sort of a certain level of division, and the quest for more fiscal support where there's room. I'd like to give now all our four panelists the possibility to respond to those projections and also the recommendations, and maybe looking at the short term for a moment, and we will have sort of a second round about the long term and the more structural issues later in this event. And maybe Maja, you want to start off from Slovenia with, as we understood, a more challenging environment than for most of the other countries. Maja, please, you have the floor.
Thank you very much. Thank you for the invitation, the opportunity to discuss the outlook, which is indeed looking brighter at the moment, and we hope that this upside risks will prevail in the future. So my comment in short term would be in the context of the economic situation in Slovenia. I would just like to share a few slides. It would be easier to follow just what is the picture in Slovenia. So Slovenian economy, of course, is also on the path of recovery after the last year's decline, recession, and the policy measures played a very important role. So they supported employment, which declined by only 1% last year. Unemployment increased from 4.5 to 5%. And now is declining actually according to the latest data. And also the larger output loss was averted with the measures. Our estimation is around 4 percentage points, which is quite significant impact. This year, we see that the domestic demand is driving recovery, but of course, as Fatou showed, Slovenia is a small open economy. So it's highly vulnerable to the developments in international environment, in foreign demand. So far, these developments are favorable for Slovenia, and we also expect significant growth of exports. This year, the positive developments were already in the fourth quarter with the increase of market shares of Slovenian exporters. So we made similar picture as you presented. We in our spring forecast, which was prepared in March, we also prepared positive negative scenarios. And after today, the statistical office published the data for the first quarter, we are even closer to the positive scenario. But the negative risks still predominate related to the vaccines, to emergence of possible new variants, to the rollout of vaccination. So we have to watch carefully the developments. But as regards fiscal support, we very much agree with what you just said, Fatou, that fiscal support should be maintained until the recovery is entrenched. So the lifting of measures should be gradual, should be well planned. And over time, the measures must become more targeted and transit to more development component, because in medium term, of course, the fiscal consolidation will be needed in Slovenia due to demographic changes, also risks of higher interest rates and fiscal rules that will eventually return. And just one more slide, our estimations of the impact of the resilience recovery plans. It will be positive, of course, and with some spillover effects, which are not included in these estimations, the impact should be even higher, mostly in the medium term. So I will stop here and give the opportunity to my colleagues to give some more comments. Thanks.
Perfect. Thank you so much. Michal, would you like to go next and share with us your perspective for Slovakia, but maybe also if you have comments on the region as a whole, please feel free to share them as well.
Right. Thank you. Thanks very much. Also for the very interesting presentation and the report. I would start with a general point. It's more like a question as well. It's about these cost pressures in the areas of commodities and various components and inputs into the production. So one of the introductory slides referred to these issues as temporary in nature, arguing that global spare capacity is ample. So my question here is if this view on spare capacity reflects a macro perspective, or does it work on a sector or regional basis as well? It seems to be the case that the that the shortages in raw materials and also components is concentrated into particular segments where it's not really clear if sort of a kind of a global output gap is a good reflection of spare capacity there. And this is something that is giving us a few headaches. You know, on a daily basis, we face the question whether these cost issues are temporary in nature or more longer lasting. And a good answer to this question is very important in this regard. And I'd like to hear what the OECD thinks about this. Otherwise, I broadly share the recommendations in the presentation on fiscal policy, including fiscal sustainability, of course. And yet again, yes, it is still the case that vaccination is a key precondition for a smooth recovery. I guess that holds globally, particularly in emerging markets. But I have to say, I don't know, situation elsewhere is in the region, but in the case of Slovakia, progress in vaccination is a key downside risk to the outlook. At the moment, it does not look too good. It's not about the availability of vaccination. It's more like the demand for vaccination, and you know, over time we'll see what happens during the summer. But we may well have to start thinking about building in our case, a third wave or another round of sort of measures in the third quarter or fourth quarter or the first quarter next year even. But that's for future considerations. It is a significant downside risk factor here. Otherwise, specifically on Slovakia, we have a somewhat different outlook for inflation. So we expect these global commodity pressures to filter into HICP figures a bit earlier than the OECD projection would suggest. So it's more of a hump-shaped development over time. But we have sort of continue to expect that the pressures are going to be temporary only, and eventually things will, on the medium-term horizon, things will settle back into the sort of usual pace of price growth. I should say that we are also reconsidering our view on the long-term performance of the economy, particularly in the light of better than expected global developments, or so to say, in our key markets. It seems that the outlook is more positive, as the presentation also showed. You have somewhat sort of revised upwards the long-term trend of the global economy. We expected these long-term losses to primarily stem from the external environment, and since that is improving, we need to, in all likelihood, we'll be changing our view on the long-term performance as well towards more positive figures. And my final point is on accumulated savings, which are a key upside risk to the outlook. And your presentation rightly stated that our economies, or in the case of Slovakia particularly, has benefited from the reallocation of demand from services towards sort of durables or goods in general, which has been a feature of the pandemic year. And here, looking ahead, when we look at the accumulated savings, we also need to take that into. So one thing is if these savings are going to be unwound to any particular significant extent. The second thing is the composition of that unwinding. In my sort of subjective assessment, people are unlikely to sort of spend the accumulated savings if they do so on services. So this sort of bias towards durables and goods is likely to be persistent, although probably not long. There will be a correction in the long term, but these gains in market shares that we have seen throughout the second half of last year might be longer lasting. So that would be it from me. Thank you very much.
Perfect. And you already addressed one question from the chat, so that's very much appreciated. And we will certainly come back to the issue of inflation, which is on many people's mind. Jakub, Matějů, would you like to go next? I mean, your country has been affected very much by a high infection rate very recently, and maybe you can share with us your assessment on how this is affecting the recovery. And if you agree with the presentations we had from my colleagues, Fatou and Isabell.
Okay, thanks a lot, Matthias. I hope you all can hear me. If not, then stop me. First of all, a short disclaimer that these views I will be sharing are my own, from my own analytical perspective, not and might not fully overlap with the official position of the Czech National Bank. But let's move on to the questions or to the topic. I'm so happy about Isabell and Mame Fatou presentation, and also by the comments shared by my Slovakian colleague. It's hard to disagree on many of the points and policy recommendations. So let me share two broad comments on situation in both Czech economy and the region. First of all, the real side, the recovery has been very fast, and the economies have proven very resilient, as the previous speakers have mentioned. I mean, almost everybody was surprised by the Q1 numbers in GDP. I mean, in Czech economy, in year-on-year terms, we have lost 2% of GDP in real terms, like 21 Q1 on 20 Q1, which is very good results compared to what we were expecting a year earlier. We were guessing if the loss for COVID would be double-digit or single-digit. I mean, 2% is a great outcome for the huge turbulence we have went through. I mean, there are some sectoral specifics, sure. I mean, but the industry is back on track, is back on pre-crisis levels. Even the retail sector, like keeping in mind that the shopping malls were closed for a good part of the year, then looking at Q1 year-on-year numbers for retail sales, it's zero year-on-year. So we are back on the pre-crisis retail output or retail sales, which is remarkable, I would say, and the picture is same all around CEE and good part of the Europe. So this brings me to labor market, which has proved to be very resilient too. I mean, that unemployment went up only by 1 percentage point so far during the crisis. The fiscal policies has contributed a lot to this success. The Kurzarbeit schemes helped people staying staying employed, and really the unemployment at around 4% is very close to historical lows which we encountered before the COVID crisis. Wages continue to grow 6.5 according to latest numbers, which is still very strong. We have been slightly revising our take on the potential output versus the output gap filtration from the modeling point of perspective. That's year ago we were thinking this would be a typical crisis with the demand shortage, with aggregate demand drop and negative output gap, but this did not really materialize. And what we think now more that it was an abrupt change in potential output which fell sharp and then recovered fast without a big implication for negative output gap. So we see the output gap being relatively shallow, negative, but relatively shallow now. This brings me to the second part, which is the nominal developments. I'm very happy that Mame Fatou and Isabell mentioned the global shipping costs, which has been a headache for Czech manufacturers and exporters, and for sure importers too. but there are other things. There are commodity prices. There are semiconductors. There are even the construction materials prices. Like name a price, and it has been going up recently. So the CEE is not shielded from this, and we import a lot of inflation pressures on top of those domestic price pressures, which I was talking about previously. So these two things combined imply that all of our countries, with the exception of Slovakia maybe, have been printing numbers high above our inflation targets. And let's say that, let me cite Jerome Powell from New York, from Federal Reserve. He said he is not even thinking about raising rates. And my message is that that maybe Czech National Bank is already thinking. So thank you.
Thanks, Jakub. And last but not least, Jakub Sawulski. I mean, we just saw that the Polish economy is doing fairly well. I mean, you're already back to the level we started into this pandemic. Share with us your views on the prospects and the upside and downsides risk you're seeing.
Thank you very much. Yeah, Poland is especially interesting to observe during this crisis, because when you look again at these slides that Diagne shown us, on each chart, Poland stands out from other CE countries. We have the best performance of in terms of GDP changes in CE countries. We have at the same time the highest projected inflation in the coming months. We have the highest growth of exports, but at the same time the lowest vulnerability to foreign demand, the lowest unemployment rate, the lowest employment rate, and the lowest job losses. So in each case, Poland stands out. And I think there are two things that one opportunity and one risk that results from this situation. And first, I will talk about this opportunity. The opportunity is that Poland will come out of this crisis with a better position in international trade. The main reason for the good performance of Polish economy during this crisis is the good performance of Polish exports. And I hope, there is a hope that our companies use this opportunity to better position themselves in supply chains and to permanently integrate into these chains. Statistics show that we have increased especially exports to Germany, and that this increase was not only in one or two directions. This increase has occurred in various industries and various types of products. So maybe in times of crisis, we were just a safer supplier for German factories, but some part of this will stay with us also after this crisis. And this may also be the case in other CE countries, because all of them had rather good export results. But on the other hand, it is important to note that Polish exports is much more diversified than exports of other CE countries. I mean, much less dependent especially much less dependent on the automotive sector. And now moving to the greatest threat. For sure, one of the main economic topic in Poland in the next quarters will be inflation. We have inflation between 4 and 5% now. Core inflation is also high. Together with Hungary, we have the highest inflation in the region and also the highest inflation in the whole European Union. It is above the aim of our central bank, which is 2.5% with tolerance of 1 percentage point. But still, I think that current level of inflation is not a threat to the economy yet, our economy yet. It is better to have a slightly elevated inflation than to have too low inflation in the recovery period. Because it means that companies have the power to increase prices, increase their revenue, and this will also not happen without consumer demand. But of course, the inflation may turn out to be a problem in the future if it will increase, skyrocket to, for example, 7 or 8%. So the public policy must carefully monitor this issue, especially because there will be factors that will push inflation up. I mean, delayed demand, European Recovery Funds, or also tax cuts that are announced by Polish government. And I will add to this one more risk. We have the similar problem as in Slovakia, so the demand for vaccination is not sufficient. Currently, 50% of our population is vaccinated or registered for vaccination. And already all age groups, adult age groups, can register for vaccination. So 50% is not enough. So there is also a need for public policy to enhance people to get vaccinated.
Perfect, thank you. Let's stick to this issue of inflation for a moment, and maybe going back to Fatou and Isabell. Laurence Boone in the presentation this morning said we shouldn't worry too much about inflation on a global scale, but in the region, the picture might be slightly different. Would you agree with the assessment, and what does it mean for the policy responses from your perspective? Maybe you can elaborate on this a little bit. And for the others, I mean, if you have anything to add, maybe just use the raise hand button and I will give you the floor afterwards. But now first with Mame Fatou or Isabell, whoever would like to reply.
Mame Fatou, shall I start and then you complement? Okay. So, frankly, I mean, of course, we have inflation rates seen higher in recent months, but this was due to temporary factors. The increase in oil prices to reverse the earlier declines. Then there have been important supply bottlenecks in the transport sector, partly related, to the pandemic and to the entering sanitary restrictions. There have been delays in ports and so on. So these have all driven up transportation costs and transportation delays, which then led to further price increases. Also, there have been a couple of one-offs like tax changes that led to high inflation. But these are all temporary factors that should wane off soon. At the same time, of course, we have this demand effect because with the relaxation of restrictions, there is an increase in demand in certain sectors, and supply is in many cases still constrained, so it cannot adjust so quickly, and this then leads to higher prices. We think that this will persist for still quite some time, because we're still living in a world with constriction, with restrictions, with constraints, with partial lockdowns, especially in some emerging markets. So this will persist and potentially also spread from goods, where we've seen that mostly so far, to services sectors. Nonetheless, this is a temporary phenomenon, and so we actually recommend central banks to look through this increase. And to not react as it will not be, or it does not reflect a trend increase in inflation. At the same time, of course, there are important upward risks to inflation coming in, especially from potential further increase in consumption. I mean, we talked a lot about savings rates already. Saving rates have increased a lot during recent months and the last year in virtually all countries. And the question is now to what extent private households use this excess savings, or these accumulated savings, to consume more. In our projections, we assume that savings rates will go down gradually, but that households still continue to save rather than use the accumulated savings. Nonetheless, will gradually go down. But the fact that, you know, when we look at how say consumers react or how they make use of these excess savings, you see that households have a very low propensity to consume out of wealth, and ultimately this was a wealth accumulation, especially the higher income quantiles. And this is, you know, where, you know, the excess savings mostly are. So as such, we are somewhat, I mean, of course, it's upward risk, but nonetheless, that's why we do not have it in the baseline that, you know, these excess savings are used. We rather think if they are used, they are likely to be used more for investment, because, you know, this is what high-income households would typically do with these funds, which then in turn could drive up asset prices. So there's a certain risk, of course, of some asset price inflation. That's what we're seeing. But Fatou may complement what I've said, and maybe with a particular focus more on Central and Eastern Europe.
Yes, I mean, some of my colleagues might have more to say, but actually, I just wanted to perhaps recall two factors that are quite important in Central and Eastern Europe. One is wage growth, and the other one is on the production side, the cost pressures in manufacturing. So let's start with the last one, the cost pressures. I think it was Michal who started with that, actually. He asked the question whether inflation, whether it makes sense to just talk about cost pressure in general in a macroeconomic sense rather than think about sectoral issues. So, well, I don't know about what is going to happen to food and fuel prices. But you're right, for example, for the tensions that we've seen, for example, in the semiconductor industry, that analysts, specialists actually forecast that this is not likely to be resolved quickly, although governments have been trying to adopt measures to address the shortages. It takes a long time actually to build the capacity and to make it operational. So we could still be having these cost pressures continuing for the next 1 or 2 years. And already apparently some car makers are already reporting that they are going to continue to face these shortages also in the third quarter of 2021. So on the production side, these pressures are possibly temporary, but they could possibly last a bit longer. And on the wage growth side, what I wanted to add to what Isabell already said is that actually due to shortages, to quite low unemployment in the countries in Central and Eastern Europe, there has been sometimes quite rapid wage growth. So that's another source of pressures. And again, with the good news that we are seeing in the labor market, these are likely to continue in the next year or so.
Thank you. Anyone from our country experts would like to join in and, you know, more sort of elaborate a little bit on this issue of inflation? Just unmute yourself and speak if you want to.
Okay, I can.
Yeah,
I can
Jakub,
share.
please.
Yeah, I can share a few points. I mean, I'm afraid that at least in the Czech case, but I'm sure this mirrors also the situation elsewhere, that the current inflation numbers are not entirely caused by the one-off factors which Isabell was mentioning, that it's the transport cost and it's the semiconductors and oil prices. We have been inheriting the let's say very tight labor market from pre-crisis times, and the major part of the current inflation is actually core inflation, and it is the non-tradables which is driving part of the inflation developments. So I mean, it's not only those things which appear to be transitory, but we see also some prevalent domestic inflation pressures which would call for some policy reaction. Thank you.
Thanks, Jakub. Maybe expanding a little bit on this labor market part and looking at a few other aspects. One would be sort of the health and the shape of the companies in the business sector. I mean, are you seeing any upheld bankruptcies, or is this anything which is on your mind? And the other aspect which came up actually in the previous webinar where we looked at the German-speaking countries there, an argument was due to the COVID measures, the labor market, which have been international, European before, have been blocked, and people who would have worked in Austria and Switzerland from Central and Eastern Europe didn't have the chance to do so because of the COVID measures. So maybe looking a little bit more at the labor market and the health of the labor market in the medium term due to what is going to happen to the companies, and also what impact did the COVID measures on the borders have on the labor market?
May I start?
Yes, sure. Maja, please.
Okay, so if we are talking about the labor market in short term, as I pointed out in my presentation, the government measures mitigated the effects of COVID on labor market. But what we are witnessing or were witnessing before the COVID crisis was the shortage of suitable job candidates on labor markets due to demographic changes, also to some mismatches. And we actually expect this to come around quickly, of course, under the assumptions that there will be no major deterioration in pandemic situations. So we can expect that labor market mismatches could occur. And we are already witnessing some shortages, especially by large enterprises for certain professions. So in that context, the active labor market policies, the upskilling, the reskilling, lifelong learning should gain more importance in policy measures to address these issues. And as regards the bankruptcies, the data so far show no major deterioration in that segment, but this was prevented by government measures. Also, the courts were not functioning fully during the pandemic period. So again, also in addressing these issues, and to prevent further major deterioration, the fiscal support measures should be lifted very gradually in a well-planned measures to prevent some negative effects on business efficiency and also on labor market, especially for those sectors that are more affected by the pandemics, especially tourism, contact services. So in this segments, the measures should be prolonged and lifted only gradually, in our view.
Okay, thank you. Michal, Jakub, would you like to expand on the business sector and the question of health of companies and see what we can expect there for the next period? Is it sort of when we withhold, when the courts are going to function again, or when maybe the bankruptcy rules have been lifted, the temporary ones? Will we see an increase in company exits, or what is going to happen? What do you expect is going to happen in your countries?
Go ahead.
Thank you. So, well, I think the labor supply may be a bottleneck for the real economy in CE countries in the medium term, or maybe even in a short term. All CE countries have very low unemployment rates, and at the same time projections of a significant decline in the working age population in this decade already. So in some cases, like in Poland, the decline will be even deeper than in Western European countries. So what are the solutions? I think firstly, it's the immigration, maybe from Ukraine and especially from Belarus now. Secondly, public policies which enhance to extend the economic activity of, especially of the older workers. Mentioned already here the active labor market policies. But finally, we will not cope with this problem without boosting the productivity, automatization of production, machinery investments. And I think this is the biggest challenge in the CE countries in this coming decade. How to enhance companies to invest, or maybe the situation will force companies to invest in machinery, for example, or automatization, etc. Thank you.
Right.
Yeah. Sure.
If I can come in on let me also reflect briefly on the labor market. Migrant labor has been mentioned. It's one area that is interesting to look at. We have witnessed an outflow of migrant workers during the pandemic year. The numbers in absolute terms are not sort of staggering. It's maybe 6,000-8,000 people, something like that. But the important thing is the skill composition and exactly so the workers that left, and obviously for various restrictions were not free to come back, were exactly people like machine operators or people sort of fairly skilled people employed in the construction sector and so on. So the absence of these workers clearly acts as a constraint on production in these sectors. And when we talk to businesses, they have been flagging the problem of labor shortages, especially in these particular areas. And you could say that there were returning migrant workers into Slovakia from other economies, but that's exactly where so the skills mismatches might be more important, as people who leave Slovakia tend to work in different sectors than people who come into Slovakia. So this is an issue that will be that will persist in the near future until labor mobility becomes again easier across borders. But it's also a medium to long-term challenge, as Jakub just mentioned, and one of the solutions to the aging problem. On the corporate sector, the performance of those that are indebted, so that have some sort of loan and have requested some rescheduling of payments, is surprisingly good. So when we look at the firms that have formal relationships with banks, so they have been coming back nicely, resuming their payments. So only in a limited number of cases, and only concerning a very small fraction of a tiny fraction of the overall loan portfolio is where we see problems. Of course, these tend to be, this is a biased sample, these tend to be sort of medium to bigger businesses. The problem is with the micro and very small businesses, where there were lots of complaints about lack of support from the government, and we have even though there was bankruptcy protection, we have seen exits in that area. But on the other hand, figures for the first few months of this year already indicate a pickup in self-employment. So as if people who terminated their self-employment last year are sort of reviving their activity, or maybe it's other people in different sectors, but activity in this area has increased as well. But this is probably the segment where much of the action will be happening, and it's actually not very well monitored. So it's very difficult to see in advance what will happen to this segment of the corporate sector.
Thank you. Just following up on a question, I have an interesting question here from the chat on the labor market part, which is pointing to the question, I think it's mainly to Jakub probably, is why don't you see a higher labor market participation as one of the ways out of labor shortages, in particular female labor market participation? I think that is probably what is behind the low overall employment rate in Poland, but it might be similar in other countries. But maybe Jakub first. Yeah,
for sure. That's a problem. That is something that I've said, that public policy should enhance, should introduce instruments which will enhance people to get the economic activity higher. So I think I have said it. And what is more, I would like to expand also my statement, because I think it's a problem when we talk about investment and we think about investment only by investment in physical capital. And that is something that I did when I was talking about investment. So now I would like to extend it by also investment in skills, in human capital, because we will now have a large amount of money, for example, from European Recovery Fund, and it will be a problem if we will spend it only on physical capital, not thinking about the human capital. And yes, this is also to this, according to coming back to this question, investment in skills also can enhance economic activity of especially female or older workers.
Thank you. Maybe going back to Maja for this, we've seen in the charts of the presentation by Fatou that Slovenia seems to be the country where the split in the labor market might be, the biggest, where you have a decrease in mid-level qualifications demand and a very steep increase in highly skilled. What do you think for Slovenia, or maybe in general, would be sort of a good way to accommodate those shifts on the labor market? I mean, it's following up a little bit on Jakub's intervention here.
Okay, thank you. Now, yes, in Slovenia, if we are talking first about the participation rate, it is very low in the age group 50-55 plus. So there is a possibility to increase the participation rate in this segment. Now, as regards the mismatches, according to our analysis and findings, there should be a shift towards more natural science education, tertiary education. So the reskilling and upskilling is of the utmost importance. Also, occupation transitions will be very important because of the very big changes in the structure of economy, of digitalization, of changes in global value chains. And here I would like to also echo what just Jakub said on accelerating productivity growth, not only by investing more in physical capital, but also intangibles, strengthening R&D and innovation, invest in faster digital transformation. And all this would also need investments in human resources and development of the workforce in the future. So, but if we take into account the demographic changes, without the net migration, it will be very difficult to address all shortages in labor market. Even if we make these shifts in education structure, but the demographic structure just point to this need for net immigration in the future.
That's interesting. Maybe the part on net immigration, I'd maybe expand a little bit on this. I think Jakub, you already mentioned Belarus and Ukraine. So Belarus, I could see from a political perspective, but those are also countries which are facing the same kind of demographic challenges as you are. So what are the regions where the migration should come from, can come from, both from regions which do have sort of the people who would like to leave and the excess labor, but which would also be politically acceptable. So that takes it a little bit further here, but maybe you want to expand a little bit on this part, because as I said, Ukraine, there is a lot of migration from Ukraine to Poland, but it is a country which is demographically in a very similar situation as Poland or the other countries.
Yes, for Slovenia, the countries from the former Yugoslavia, especially from Bosnia, Serbia, Northern Macedonia, they are already coming to Slovenia, but mostly to construction services, some low-paid jobs. But of course, they're also facing demographic changes. So it will be with the increase of productivity and possibility to also to offer higher salaries, the Slovenian economy could also become attractive for some high-skilled jobs from this area. But of course, there is also the competition coming from other countries like Austria, Germany, and all other countries in Central and also Western Europe that are already attracting this professions from this area. So I think the answer is higher productivity. So investing in higher productivity, which could enable our companies also to offer higher wages. That would be in medium and long term, that would be the answer, how to attract a labor force.
Thank you. I don't know, Mame, Fatou, Isabell, would you like to comment on this? What would be your perspective? I mean, you've been looking at the demographic changes, not only for the region, but beyond that. What would be, from your perspective, a balanced approach to those labor market shortages as we discussed? I mean, there's migration, which could play a role. There's activation from female participation, higher productivity. Where would you put the effort if you had to give an advice, which you have to?
Well, I think this is very country specific, and Mame Fatou can say a bit more about the specific countries, and also our desks who are here. But in general, I think we would opt for a relatively balanced approach. Because as you say, there are different options. You can activate, a certain labor resources that are not yet fully utilized. Women, can of course also think about, prolonging working lives to, really make use also of the skills of the elderly. But of course, immigration is also a policy lever, right? And of course, also upskilling would help you, to some extent with that. So I think, a balanced policy approach that makes use, of different policy levers would in general be the best. But as I said, it depends, of course, a lot on the specific country and how much potential you have, to tap into these various sources. But I'm sure Mame Fatou and maybe some of the desks want to.
Yeah, I just wanted to add on the point that was rightly made in the chat actually about female labor force participation. So in the latest surveys that we've been writing for countries in the region, in fact, this issue of how to increase female labor force participation features prominently, because it's not just an equity issue, it's actually a growth and an efficiency questions. It's actually the sector that has, together with older workers that, as Maja said, are not sufficiently mobilized. And by older in Slovenia, they're actually quite young. So we're not talking about 70-year-olds who are not working. but more in the 50s to activate more of these people. But for female labor force participation, of course, it's a very difficult area, because often there are cultural models that are cited. From the economic point of view, we have highlighted the two key issues. One is access to affordable and high quality childcare, and the other one is the current disincentives in the tax systems, which are quite heavy, that are not encouraging second earners in general, and of course mothers in particular, to work. And yes, so those are the two points I wanted to make. It's actually quite difficult and not cheap to expand the childcare that is affordable and that is also of high quality. But these are the recommendations we made in the most recent surveys. Perhaps Nicolas or Jens, you would like to add more on this issue, but we can reserve that for the next round when we talk about productivity.
No, please go ahead, Nicolas.
Thanks. No, just a kind of transversal issue is, I mean, a lot of countries, in particularly CE countries, are characterized by a lack of diffusion of new technologies, and so you have always these frontier firms leading the game. And you have a lot of small firms that are lagging behind, and that's typically, I mean, we talk for Poland, that something that has been recommended in the last survey, but there is all this universe of small firms that are not able to upskill themselves in catching up with the frontier. And in that case, I mean, of course, investment, upskilling, human capital are key, but also all this universe of small firms need to be engaged, and you will double benefits. As you will have a better diffusion, an increase in productivity. So it's not only on one side upskilling the population, but also that small firms are also able to absorb new technology. And with this mega trend that is digitalization, that had just been reinforced with the pandemic, and it will be this diffusion will be absolutely essential.
Yes, Jens, please.
Thank you, and particularly thank you for participating in this very interesting discussion. I may want to point to a little bit further out. The Eastern European countries have in common that their labor force will become older and smaller. And at the same time, you also need income convergence. I mean, that's kind of the purpose of many of the policies in place. So when you think about it, I actually think that the Eastern European countries should have relatively high wage growth because they need to get rid of their least productive firms, and they had to move resources towards the high productive firms. For those of you that are old enough to remember that, this is called the Scandinavian inflation model, that you want to have consistent pressures on the labor market, that you force firms to continuously upgrading their production, investing in the skills of their workers. And all this will ensure that over time, you will have a smooth income convergence process. And in my view, for the long-term perspective, the problem is that if government starts preventing this process, then you will slow down your income convergence. You will slow down the renewal of your industries. In all the Eastern European countries, there's still a large shares of the companies, the sectors, industries, they are protected from competition. And is that something to be feared because of the social problems, or is it something to be welcomed because you have higher income convergence? I think that you should welcome more competition, welcome that you end up living in a society where wages are high, because that's what leads to the income convergence. And that is what's forcing your companies to continuously upgrade in terms of technology and production processes. Also, the same thing applies to inflation. I mean, over time, if you're going to have convergence in prices, you need higher price inflation than the Western European countries. So, of course, the skill of this, the art, would be to make sure that this process doesn't get out of hand. And I think that for the time being, we're comfortable. I would be more worried in 2-3 years' time when this continues. Thank you.
Thank you. Maybe a question to follow up. What would be sort of the right measures to accompany this process? I mean, you're talking about more competition, and maybe that's not a question only to you guys, but to everyone. That will have sort of, you will have changes in the labor market. What would be the right policy to come to accompany people who might be laid off in this process, who might have to find different jobs? What would be sort of the right measures? Maybe also looking at the recovery plan. I think Jakub already mentioned that we need that investment into capital investment is needed, but also investment into people. So my question would be, if what you're saying is the right process, what would be sort of the way, the good accompanying measures to support people in this transition? Because we are looking at a transition, don't we?
Sure. It's a transition, and it's always the same measures we have to look at. There's nothing new. And the first one is that we have to support mobility. We have to support that people move to jobs. To some extent, jobs will move to people. We have seen that in particular western part of the Eastern European countries, but the eastern part, there's very few jobs moving to eastern parts. So you end up with some pockets with persistent unemployment, particularly among low-skilled workers. And you have to look at mobility measures to help them, to bring them to jobs. That can either be in terms of helping with commuting. It can be in terms of relocation, if the distances are too high. And the third one is, of course, is to ensure that there's a continuous upgrading of people's skills. And this kind of upgrading will take place just by them changing jobs. Every time you change your job, you need to upgrade your skills. Maybe sometimes very little, sometimes it's a lot. But then you have to come in with courses. What we see is, I mean, long-term, lifelong training is not very well developed in the Eastern European countries. And this is something that should be more focused on. And I think this is difficult in the sense that it's not enough that the state provides the courses. You also have to make workers that have a job aware that they need to upskill, that they cannot expect to be in the same job for the next 20 years. So they have to prepare themselves for the next job change. So this is a very complex issue, but that's the way I see that the Eastern European countries can continue moving forward.
Okay, I'm sure that there will be reactions to this approach. Jakub, Michal, Maja, who wants to go first?
Can I maybe start just quickly? Sorry, Maja, if you wanted to.
No, just.
No, I think there are crucial issues that have been raised here, and so in terms of, I think we're reaching, as countries, we're reaching that stage of development where the level of sophistication required of public policies is at a level where I'm not sure we all are. I'm definitely not in the case of Slovakia. So to deliver the required skills for the labor market, to deliver the kind of health systems that we want. I mean, these are, and even in terms of to deliver the kind of migration policy that would be helpful, that requires a certain level of administrative capacity and sophistication, and I don't think we're there. So that's why a very important element of any reform program is the reform of the administration itself. We've had, I mean, you know, when you lay out the kind of things that need to be done, you know, improve education, improve, I don't know, innovation and so on. I mean, these things that, you know, after so many discussions, they're almost obvious, but they're not happening, at least not in our region, not in Slovakia. The question on female participation, there has been considerable progress in participation in Slovakia, but particularly when it comes to some of the vulnerable groups or some of the sort of more excluded groups, it has been lagging behind even within the region. So there are clear policy challenges here, and successive governments have been unable to sort of bridge that gap to a more sophisticated and more elaborate conduct of policy. And I think this needs to be addressed as well, in addition to sort of the fundamental problems that we are dealing with. And also, let me just tie some of the thoughts from the previous discussion together. I mean, I think generally you can state that in order to progress in the next stage of development, the countries will have to undergo a fairly profound change in the culture, whether it is about dealing with the elderly, the expectations that people have about their role in the society, same for the females, but also same for the presence of migrants in the society. And again, it would be, as Maja mentioned in an earlier intervention, it's not only about low-skilled migrants. In order to sort of bridge the gap between now and at some point in the future when our education systems will be producing the kinds of skills that the economy needs, so that bridge can be actually filled in with highly skilled foreign migrants. And it's not only a question of wages and the ability to pay. It's also a cultural. I think the society is not even prepared for that, and the policies are way behind. I mean, we as a central bank are luckily competitive in the global. We managed to hire from the global market, but it just, I mean, the complexity of getting people here is even for a public institution of our sort of standing is very difficult. So I imagine startups and companies like that, the kinds of problems they might be facing. So I mean, to unlock some of the obvious solutions, we need a change in the culture, but we also need a profound level shift in policy. Thank you.
Thanks, Maja, please.
Yes, thank you. So yes, I would agree with Jens and Michal. This is a very complex issue, and even without this COVID crisis, we were facing big challenges because due to the fast changes due to digitalization, which changes labor market need for certain professions. And also because of the demographic changes, as I already mentioned. So I would agree, reskilling, upskilling, lifelong learning are the answers. And even during this COVID crisis, during the job retention schemes, it would be very useful to include some further training of the people who are temporarily laid off or are included in these job retention schemes, because the need for new occupations and for new knowledge, for new skills will only increase with the digitalization. And of course, this includes also digital competencies, because we are witnessing now the really big surge in remote work. Some institutions are talking about the rise of telework generation, and this will require change of mind, change of thinking, that this would of course allow for greater mobility, but would also require big changes in also in business models and in mindset. So active labor market policies are only part of the answer, but this is much more complex issue, I think, that we have to address with the policy measures.
Thank you. Very deep in sort of the more structural and deeper questions we have to address for further development. And we are also almost at the end of our time. So maybe I would like to give Jakub also the possibility to respond to those more, fundamental questions, and then maybe let Fatou and Isabell conclude, if that's fine with you. I don't know, who would like to go first? Jakub, yeah, you have to unmute yourself.
Yeah, okay. Do you hear me? Yeah.
Yes, I do.
Now do you do? Okay, great, thanks. I mean, all those things were very important. I mean, this labor market transition is something which is progressing. We have been seeing increasing flexibility and an increased use of part-time contracts, which is able to bring in more workers, which have been passive before, like women. But we have a long way to go to catch up with our Western peers like Germany. I think it's not only the institutional question, but also a question of social norms, as Michal was bringing up, that maybe people here are not fully there, and not all, for example, women and older people are happy to jump on full-time jobs. So offering them a flexibility is a way forward. Another thing is that we might be wasting some of the knowledge because when we import labor force from the east is often in the construction sectors and low-skilled services, but those people coming have degrees. They are doctors, and they have education. So maybe there is some waste of resources going on here, and we might improve on that. And the final point is infrastructure investment. That I think one of the speakers was mentioning it, that the distances are still very long, and maybe we are at the point where we classically assume that the private corporate investment has higher productivity gains than public investment, but now maybe we are getting into a point when public investment might actually be more productivity enhancing if it would enable the distances to shorten and enable people to move into more distant jobs and smooth these the transportation costs and make the distances shorter. So, few thoughts. Thank you.
Thank you. Jakub, would you like to follow up?
Yeah, very briefly, Jens mentioned very important issue for Poland. It's moving the limited labor supply from companies where the productivity is low to companies where the productivity is high. That's a very important issue in Poland because we have a very high share of very small companies and low share of big companies in our economy. And well, there are two main solutions. One already mentioned by Jens is relocation of labor supply from the places where the productivity is low and may rather stay low because, for example, of lack of infrastructure, to the places where the productivity is higher. The second issue is our wrong policy measures. I think that, for example, in Poland, I don't know how it is in other countries, CE countries, to be honest, but in Poland we have tax measures that rather enhance companies to stay small than to grow. That I think that is this is one of the problems here.
Thank you. That gives me sort of room for two. Isabell, would you like to conclude because we're almost at the end of our session. And yeah.
If I may say
Fatou,
so.
do you want to go first?
Yes, exactly. I wanted to say, Isabell, that you can conclude. I just wanted to say, since we haven't responded all questions that are in the chat, that actually for all of those that I see there, I think the answer is in the Outlook document, in the EO document that is on the website, in particular the one about what we think about savings and what are the different scenario for that. But then I'll let Isabell conclude.
Okay, I will not, draw any big conclusions. I think it was an extremely interesting discussion, very diverse. I mean, of course, we focused a lot on the outlook, on the risk around inflation and so on, which obviously differ quite widely across the countries and might be particularly pertinent to your region, issues relating to labor market and so on. I think the discussion showed actually that, the mindset seems to be slowly changing away from the crisis mode to more structural, medium to long run challenges, which I think is to some extent a good sign, right? But it also shows that, these problems are coming back, maybe are even bigger now, and they are not so easy to tackle. So policymakers, I think, need to be very vigilant and in some cases very creative to use different tools, to really tackle these challenges, from demographics, from the upskilling, from digitalization, just to name a few. But as I said, it was a very interesting discussion, and I would like to thank you all for this very interactive webinar.
And I'd like to echo that. And also, I think what we have seen from going from the projections to the more fundamental questions, I think this is probably, maybe there's appetite for more discussions of this nature to go deeper into the matter and see what, what can be done, what should be done to enhance economic and social development in the region. We stand ready to work with you on this. So if you're interested, stay tuned, stay with us, and also join us for the next webinar, which for the region, which is sure to come. I would also like to thank everyone who was here today, Isabell, Fatou, Maja, Michal, Jakub, for your contributions. Also from the desk and the economics department for your contributions. You also made all the work for the projections. I think that's also something we need to acknowledge. And very happy that we had this, I think it's the third or fourth webinar we had on the region, and we will continue this series. So please stay tuned, stay with us, and wish you all a very nice afternoon, and we will be in touch soon.
Thank you. Bye.
Thank you. Bye.